And joining me here on set, it is my pleasure to have two esteemed guests from our team. And joining me here from the Charles Schwab team, Kevin Gordon, Income Research and Strategy, Schwab Center for Financial Research. It's great to see you both. Thank you so much for being here. So Colin, I'll start with you. Just maybe a big picture thought on how we're going. We're near the end of the year. We've had a lot of sort of juggling happening and some fears in the market, but really we're only 2% off the high. Some of your thoughts?
Sure. If we take a step back, if we look at it from a big picture standpoint, and what we're looking at with the bond market is the economy still kind of chugging along? Is the labor market loosening?
And Kevin, it's great to see you. I haven't seen you in a while as well. We think about what's going on here, and you talk about TINA even. Is that back?
Well, it's back for data. So there's no alternative for federal government data. So to Colin's point about being in this, data drought, there is a lot that we're missing in terms of having this impaired vision of being able to see what the actual underlying fundamental services, but then what's also been struggling, which is manufacturing.
And I do want to talk about third quarter earnings season, where you said bending, not breaking. That's catchy, and I'd like you to explain that. But hold the thought for a moment, Colin, as we take a look here at the big picture and we look at what's going on when it comes to bonds, and you see the 10-year bond yield moving higher. I mean, it happened last time the Fed cut rates that in the end the 10-year bond yield went higher. And look at us here again. What do you think when you think about for bond investors, what the Fed may do? What is the anticipation here for what happened in bonds? I mean, that was, the glory days, I think. Tell me more about earnings season. Your thoughts here, Kevin.
So, the point about bending, not breaking, so much of the narrative around corporate earnings was that you were really going to start to see a lot more related. But we would say that paying attention to how much tariffs get passed now to consumers as we round the corner into 2026, which we think has to happen at some point, just because companies can't work on that inventory cushion as long. That's one thing we'd be watching for as we turn the corner.
So wonderful to have your perspective, General. I wish I could have you both on every day. So nice to see you both. Kevin Gordon, Colin Martin, thank you both from the Schwab Center for Financial Research. Kevin. Great to be here at the Schwab Impact Conference here in Denver in the Colorado Convention Center. We've had 5,000 people sign up for this incredible event, 2 days of great guests, but maybe we saved the best for last. This is a good one. I have a special guest for you with me right now, James Kostulias, Managing Director, Head of Trading Services, Charles Schwab Company. Thank you so much, James, for being with us.
Well, thanks for having me.
So tell me, some people have told me this is my 19th Impact Conference. People really love this. It gives them an opportunity, asset managers, wealth managers, RIAs, they're learning a lot from each other, seeing old friends, new friends. Tell me.
Yeah, I think that's spot on. The experiences.
You get pulled in so many directions. People are asking you market advice. They're also asking you what tools they can use, right? Tell me some of the conversations that you've been having. What have you been focusing on here?
Yeah, so I'd say probably two things I would lead with. One would just be on the
data. We talked about direct indexing. We talked about ETFs. We've had so many conversations today, and tax efficiency or tax deferral to push that back to when maybe you're older and you're in a lower tax bracket is so key for folks because they want to build that wealth, but not when they don't want to have capital gains and then not want to take money out that they may need for something. When we think about the environment that we're in, the market continues to hit new highs. We're 3 years into past the bull market date, right, in October. Are people looking for a fourth year?
Yeah, I think the overall sentiment, we just released.
Look for the long term. If you were buying the dips all along the way, whether it was during COVID or Liberation Day or any sell-off, there was that August 5th day. Any day where we have fear in the market and someone buys, they've done well. Do you find that people still have that buy the dip mentality?
Absolutely. And we saw it very.
And how people have now become so interested in that. It's not something people were, really well rehearsed in, but with all the tools, tell me how they're hedging, how they're using options trading.
Yeah, so I think especially when we talk about the Mag 7 and this idea.
More people come on board to be investors. You have the pros and then you have the regular folks. We talked about, the pros and then my Aunt Mary type of thing. But more and more people are coming on board on Schwab. They're using the education tools. They're looking at even crypto or just doing things differently and really having a portfolio that is more diversified or more interesting to them now. A final thought.
Yeah, we'd love to see it.
Actually just asked me the other day, I have $15,000 to put in. Should I put it in now? And I don't have the answer. should I put it in now, or do you think the market's going to pull back? And, you know, I think most folks would probably say long term. What's the answer to that young person?
Yeah, I think the answer is over time, if you're invested, things are going to work out well for you. And so it's really hard to pick.
Thank you, Sam. It's wonderful to be here. We've had so many great conversations, wealth managers, asset managers, RIAs, talking about everything. And now it's even crypto and fintech. And that's why I bring in my next guest here to speak with us. Joining me right now, Rick Edelman, founder, Digital Assets Council of Financial Professionals. Thank you for being with us. I mean, everybody talks about what great conversations they have here. They see old friends and make new friends. Crypto in particular, I'm going to start with that, because we saw Bitcoin above 125,000, then below 100,000. It was risk off for a bit. But you did note that we've seen a real interest. This administration has moved it forward. Tell me more why crypto belongs in a portfolio. Where do we stand?
Well, advisors believe in diversification.
Okay, yes. You know, which products, which ones are most popular or seem to be the ones that are definitely in a portfolio? I mean, we always talk about Bitcoin and Ethereum. Is that something people should hold?
And easily arguable because
that you're starting to see, you know, BlackRock and all these other companies now really showing an interest. I mean, we've had government interest with XRP. Tell me more about that. Does that drive everything too? Because when we think of the store of value, people don't necessarily, it's like a herd mentality. If somebody says, oh, it's now bad, go away, you know, when does a crash come or not? That's not likely.
well, that used to be the concern, and that was because back in the day, and I mean 3 years ago.
Tokenization too, and I will tell you, I mean, I had a great conversation with Mike Novogratz, who just was all about crypto, and you know, his allocation is double 100%. Or triple, or right. I mean, he wouldn't say how much he has in there, but you have to figure it's got to be at least 50% plus. Very different than what my Aunt Mary might have, right?
And I wouldn't argue that your Aunt Mary should do what Michael is doing. He's a multi-billionaire, but
the other, Solana. Tell me about some of the others that really have had merit, have shown, because as each day passed, people built more trust in crypto and crypto products. Tell me about some of the others that seem to have been gaining some trust.
well, we need to recognize that the reason these different coins get built is because
Another topic. Just to finalize with the crypto story, you talk about allocation and what advisors can help with, and something that maybe we don't talk about as much. You have crypto taxation, crypto estate planning, also crypto philanthropy. A final thought on these?
And this is exactly where advisors ought to spend their time. It's not whether you
Another impact conference for you. Great to see you. Thank you very much. Rick Edelman, founder, Digital Assets Council of Financial Professionals. Thank you for being here. We have a lot to talk about. We've been hitting all different topics, including next up here, all about housing. We've seen mortgage rates drop. We've seen refinancing moving higher, but affordability is such an issue. How are we doing in the supply availability? So let's get the pro in here. Chen Zhao is with us, head of economics research at Redfin. Chen, thank you so much for being here. We love to talk about the housing market. It's an exciting topic, but we know that it has slowed. There have been so many hurdles. In eastern Long Island, where we had homes and such, there were homes that were $300,000-$400,000. And in a few years, 5 years, those homes went to $700,000-$800,000 or over $1 million now. It's the same homes, that really used to be $300,000-$400,000. So when we talk about affordability, like, oh yeah, the price came down $50,000, but it's like never going back to those old prices. You can dream. Everybody should own a home, and it's a beautiful thing to own a home and have kids and have grandkids and all that. It's at the same time, we always hear about, should I rent or should I buy? You have any advice for folks, because things are pretty pricey? What do you tell them? Lower or higher? Are mortgage rates lower or higher in a year or two?
Slightly lower.
All right, Chen Zhao.
be here.
You welcomed everybody. There's 5,000 people coming in and out of the Impact Conference, excited about finance. Tell me a little, buy low, sell high, or buy and hold. Now there's about 1,001 other ways to do this, but some of it you have to have a strategy and goals. And what are some of the thoughts that you've been telling folks about the economy and about the or do you think we're going to have a pullback? I'm not an advisor. I'm going to ask you that question, a young person, because no matter when we sell off, we're still at the highest points in 10 years, in 20 years, in 30 years, and those moments that felt horrific, they're long gone. And if you have a long time horizon, then I guess you can stomach 10 or 20%. You heard what they were saying yesterday at Goldman and Morgan, they're, caution, caution. Is the market too frothy at this point? Or do we worry about that or not so much?
Well,
last year's dogs or next year's winners, they used to say that. You talked about smaller companies, quality bonds. A thought there.
Yes, well, these.
And that folks are so advanced now, and they have all the tools. Schwab has all the education online. People are asking smarter questions because they're interested and they have the tools. We've really advanced across the board, right? Final thought?
Absolutely.
Network, Omar, thank you so much for being with us. Everybody here at the conference loves bumping into Omar here